Alright guys, welcome back to the channel, and today I wanted to take a trade on cryptocurrency, and now I'm seeing that trade would have failed if I've taken it because I'm actually trading from a wrong zone. If you see, the trade is actually price is actually at the premium level and I want to buy, and I'm not supposed to be buying at this premium level, which is 50% above. I want price to come back to the discount level so I can buy. So I was looking at trading a CRT entry model where I'll have to wait for a sweep of liquidity below previous day or previous lows. Like we can see here, these are previous week lows here. You can see about 5 to 7 weeks, or like 2 months back rather. So I see here like we have enough liquidity around here, so it will be a good place to follow price up this week at least to reject from the liquidity that has been taken. So that is what I'm looking at, but potentially using the law of PDRAs and everything, where you have to respect the premium and discount level, this trade is not a good trade setup, or is not a high probability trade setup, because we are still in the premium level, and buying from the premium level can be very dangerous. Although everything here that is supposed to make this trade move is situated at the premium level. So if you look at it again, you see that unless I'm the one drawing it very wrong, because I don't know how to believe. So let's just say this is where the low starts from. Let's draw it again. This low to this high, which is more like the new swing point, because I was using the other swing low. I was actually using this other swing low here. But let's just say this is our initial low, and we have this to be our high. Even at that, price is just barely at the equilibrium. So price is just at the equilibrium even at that. So I don't know, but let's just say if I see what I like, I'm just going to risk minimal on the trade setup. So more like, CRT entry model is when you have a sweep of liquidity below levels like this. Yeah, like you can see, there are enough liquidity below here. Like I said, previous lows are the ones that have enough liquidity also. We carry liquidity below this low. So if we check on the daily time frame, right, you will see that we have enough liquidity below here. And this could also give rise to CRT entry model. Now, the thing is, where is my potential target, or where would you target if you're entering there? Like, so I'm not seeing more reasons why I should not buy now, because this can be like a bounce. Price can actually bounce, or price can actually reject from this liquidity and bounce on this fair value gap, coming back to fill up the discount level very well. So I'll rather sell instead of buy. So selling will actually be the safest option instead of waiting for buys. So I think that's what I would rather do. So price can come back to fill up this AVG again or not. But for the buys does not really have any potential for me. I don't know how I'm going to squeeze myself in. I'm not seeing any potential setup for buys, even if we have enough liquidity below there. So let's check 4 hours what we have here. Yeah, 4 hours is still showing the same thing. There is no good formations for buy. There's no good formation for buy. So all I see is bearish price. You can see how this is more like a bearish market here. So price has been dropping, and I'm still expecting price to drop down to a little bit, at most 61%, before we can start looking for bullish prices there. So how do I trade this market now? So I don't know how I'm going to enter this market. I might either sell, or I might either look for more opportunities for selling. So I'll just use there as my inducement, right? This high. So if I should see price take out liquidity above this high I drew here, this high should be like an inducement level. So if I see price take up liquidity above here, then I'll start looking for a confirmation around the 1 minute, 5 minutes to start dropping. So at first, what I was saying was a good buy on the 15 minutes. I was seeing a good buy where I have, after the sweep of liquidity, I had here to be like, I'm showing you my confirmations and everything I had. I had the sweep of liquidity around this low, sweep of liquidity from the weekly time frame. This is a shifting market structure. Or if you check on the 5 minutes, you'll see very well that this is a shifting market structure here. So I was expecting price to retrace to at most um the discount level here before I can actually enter for buys. But now I'm seeing that price did not actually retrace to the discount level. If all of these had happened in the discount level, then I would have gotten into this market. Like I would take this trade right now without even looking back at the setup again. But since it's happening in the premium level, is a good setup happening with in a bad place. Yeah, so it's a good setup happening in a bad place, and I don't trade that because I know what I'm doing and I know what I'm looking for. So, like I was saying, on the 15 minutes, we have here to be a shift of market structure. This other line to be sweep of liquidity, shift in market structure, retracement. If you use your Fibonacci tool, you'll see that price has actually retraced down to the discount level, even to the 61%, which is very, very nice and tempting from this level. But I don't think I'm going to enter, or I'll just trade it in a demo account instead and watch. Yeah, I'll trade it into a demo account. Now, what would make me enter this trade is if I go back to 1 minute, like what I was supposed to do then. If I go to 1 minute, I'll look for a shifting market structure. Where will I have my shifting market structure? Above here. So let me show you how I would have entered this trade right now if I were to, or if everything happening now was happening in the discount price. Let me show you my MT5 now. I also trade it on a demo account, right? Hey guys, welcome back to this particular setup. So it's been actually 2 weeks since I did this setup on CRT Entry Model. I told you it was a high probability trade setup, but I'll be sitting out because everything was situated at the premium level, and I cannot be buying at the premium level when I'm expecting price to come back to the discount level. But this is how the trade goes. This is how the trade went. Everything was actually in play from the weekly time frame. It was a very great zone to actually sell to buy from, but I was not just in love with the position of where the setup was. So the setup did not really come back to the discount level, or at most to this kind of resistance level. We can call it the mitigation block here, where you can see this liquidity sweep was actually a good one. We were trading with the trend, so everything to make this trade go well was already intact, but the position of the analysis or the confluences was not really what I liked about the trade. So let me show you something. So I was actually looking at a possible sell on the 4 hour there. If you watch the previous video I did, like although it's joined to this one, if you listen very well from the beginning, I told you I was actually feeling like price was going to take out this high as a liquidity, so as to sell back to the discount level. So I was expecting price to take out this high as liquidity, then sell down. But I noticed something before price got here, which I will show you. My analysis was being done on the 15 minutes, so I was actually not seeing too many things here. So let me go back to the 15 minutes here. Now on the 15 minutes, this was what I noticed that made me want to go bullish full. But like I said, I did not trade it because I thought I'll be looking at this one. So this was my initial point of interest on the 15 minutes. I just wanted to do more like a scalp here. After this shift in market structure, this was the level I was looking to buy from. But if you look at this level, there was no good price action here. If I should use this arrow here, there was no good price action around my point of interest. So I kept on watching price retrace down, hit my supposed stop loss because it was situated at this other block here. And this is what price did. Price took out liquidity again, and this is what I like to see whenever I'm trading. This is what I like to see: a liquidity sweep on the lower time frame where you're waiting for a confirmation. Remember, this was a liquidity sweep from 2 weeks back or even a month back, and now on the 15-minute price gave me this liquidity sweep here. So I liked what I was seeing, but since I already promised myself that I was not going to trade it because it's not a premium level, I kept on watching. So now this liquidity sweep was a good confirmation, a first criteria to having a high probability trade setup. After the sweep of liquidity from the daily time frame or the weekly time frame, you have a lower time frame sweep of liquidity telling you that price is not ready to go in the other direction, go bullish. Now this is a shift in market structure, and the 15 minutes is not really a bad time frame in looking for confirmations and analysis, because it's a little bit stronger, just like stronger than the 5 minutes. So I think the market was really in control here. So looking at this now, this was more like a very good setup here after this sweep of liquidity, shift in market structure. Then if we check maybe on the 1 hour, there was a fair value gap around there that price came back to. Let's check. That is it here. Although the fair value gap was not really seen here on the, let me check the 30 minutes. I think there was a fair value gap there that price actually requested to make the trade a very good one. Okay. There was not really a good fair value gap. Although if you wanted to enter, you could enter from this particular fair value gap here. This one. But most times I always enter right at the peak of the shifting market structure. When there's a close of a candle around the shifting market structure, it's also a good confirmation, like a body close around this level. But this is supposed to be like an ideal entry where you retrace back, stop loss below this level. It's still situated at the same position. So this is what made this trade a very nice setup. And I had to forget about the 4 hour time frame and liquidity sweep, although there was a little bit rejection as price swept liquidity above here. But after seeing this confirmation on the lower time frame, this level shift in market structure, liquidity sweep, I knew we were about to go bullish. But I could not execute the trade because I was not just feeling the setup again because of the position, right? That was what I said. And you can see here, this also aligned with a 4 hour FVG. So I already agreed to stay out from this trade. I just wanted to watch the setup. So this was my my level here. That's my target for now. That's the first liquidity that price was supposed to come back to before going or before retracing. This was the first take profit level here price was supposed to come back to. This is more liquidity. If we check on the daily time frame now, this could possibly look like another daily CRT entry model for any other person that find it more interesting, but it's going to be a low probability trade setup because it is opposing the trend. But if you look at it now, if I'm to take a new setup now, if you look at on the 15 minutes, if I have a confirmation here, which I do have a confirmation here already, as this level is a strip of liquidity, a shift in market structure already. This is a shift in market structure below here, and this could be possible inducement from this level. So if I were to counter trade this right now, I would just want to enter immediately after the sweep of this liquidity. But like I said, I don't really like trading cryptos. I'm just showing you how this strategy, CRT entry model, works almost everywhere. It works everywhere. Then you can just trade to this level of liquidity. This is the next liquidity. Then where will my stop loss be? Just right after the confirmation that liquidity has been swept above this inducement level. So that's how we do trade CRT entry model. It's not very complex, but I'm not really trading this. It's opposing the trend. This one I would have taken was this one, but it was not at a premium level, but it was actually a very good setup. Very, very good setup. I told you at first when I started the video, I did not really use my Fibonacci. That was why I came in as this is a high probability trade setup and I'm going to take it. So later on, when I saw where this price action was at, I began to doubt it, and that was why I just left it. Since I've already said I'm not going to trade it, just test it on it, maybe demo account, something like that. That was why I left the setup. But it was actually a very good setup and a high probability trade setup that was actually in the wrong direction. This is what could happen to you. Although if I've taken the setup at that time, like I told you, I would have been stopped out because price came back to take out liquidity. It was later on when I have left the market and the next day this liquidity sweep occurred and price must have already gone far. But I told you that if I were to be in the market and this was supposed to be in my right zone, or even though it come back to this 50% level or more here around this line is the weekly 50% below the equilibrium, I would have taken a setup full I'm telling you. So that's just all CRT entry model. So if you don't know how to trade CRT entry model, you can go to my playlist here, watch more videos on CRT Entry Model. Do also like this video, subscribe to the channel, and also comment your questions. If there are any other method you can actually use to treat CRT Entry Model, let's see. Let's comment and tell me how you feel about CRT Entry Model. Does it work for you or not? So I'll be expecting your comment. Do also share the video. Thank you.